Hello friends, this is Raj Sastry from Raj Option Trading. Today is August 20, 2021. We will talk about Pfizer, one of my favorite stock. It's a drug manufacturer, and we'll also look at competitive landscape and see what are the other companies and stocks playing this in this area. Pfizer has got its mojo back with the COVID-19 vaccine, and I think it's a great story at this point. We'll look through and see a couple of numbers and see if it makes sense to buy at these levels. So with that, from a top news in the drug manufacturing area, looks like US is probing Moderna for higher heart inflammation risk. So something we'll look through a little more detail. News like this can help stock like Pfizer because it's a little more safer. And we also have BioNTech, BNTX. Looks like it's not as big as Moderna, mainly because it's a lower expected sales, less advanced pipeline, and a little more lower profile than Moderna. And we got Pfizer and Merck here. These are two very long-term stocks. They were there forever. These are laggards in the past, have not done well. But with this COVID-19, Pfizer has done very well. And off late, Merck has been doing well too. I like both these stocks at these levels, and both give very good buying opportunities. And then you got here one of my favorites, Lilly. It's get some approval for heart failure. And we got Novavax here. It's expected to do even more for the in the emergency use authorization approval for its COVID-19 vaccine. And we got here HZNP Horizon Therapeutics. Looks like they had a great second quarter results, and also they had a good guidance here. And we got AbbVie, one of my favorite stocks again. Looks like it is making some progress in the Alzheimer disease. And as you know, Alzheimer is a very tough disease to crack. Biogen and even AbbVie have been at it for a while. We'll see how it is. I think both Biogen as well as AbbVie can win here. And we got here JNJ Johnson. One of the favorite stocks is solid, rock solid fundamentals. Looks like it gets a nod for COVID-19 vaccine in Indian, teenagers and adolescents. And then we got Bristol Myers Squibb, one of the steady Eddie stock. They received their approval in the European Commission for ABECMA. So with that, I think these are the top news here. Lot of things going on in this drug manufacturing world, and many of these stocks have got their mojo back. Especially, they're doing great with the vaccines. So with that, let's look at Pfizer and see what Glassdoor has to say from a rating for the CEO. So as you see here, I love this rating here, 91% rating for the CEO. As I read through the Glassdoor, looks like there is a lot of positive news around the CEO and the company in general. I think that's a great one. A lot of people love working in Pfizer. So with that, CEO checks out. I think company is doing great from an employee perspective, and also in general. And if you look at the key highlights here, we'll touch on very quickly. We'll not go into too much detail. From a financial performance, they did a great 86% operational revenue growth. That's very good. And 68% adjusted diluted EPS growth. Great numbers. I think they are doing good here. And also from a guidance perspective, I think they are doing a good guidance here. They're raising the guidance for FY21. That tells you the company has confidence in their pipeline and they can do very well in the future also. And as you look at the innovation, I just listed few of these companies, a few of these innovation. They got 100 plus pipeline candidates, solid, I would say rock solid pipeline for Pfizer at this point. As you look through, in the nearer term, they got some authorization for emergency use COVID-19 vaccine. And also, as you see here, successful 2A human challenge for RSV. That's also good. And also they started dosing in the phase 3 here for prostate cancer. So as you can see here, a lot of things going on in the pipeline. They got very good pipeline and they're progressing the pipeline very nicely. So that's why I love Pfizer and its pipeline at this point. Company has been up and down, in the past, but now looks like they're getting their mojo back. So with that, as we look through here, they have a value for patients and value for shareholders. I think they're doing good by both patients as well as shareholders of late. Now we'll go into a little more details on the results here. The revenue in Q2 2021 grew 86% operationally. That's a good number here. And they got various multi-billion dollar brands here, indications here. COVID-19 clearly doing very well with the BioNTech partnership, $7.8 billion run rate here. I think that's a great number here. And here we got Equiquis, I think $1.4 billion run rate, and it's actually growing as you see here, 13% operational growth here. And then we got one more here, billion plus dollars, and growing nicely internationally. And one more here again. Some of these candidates like this one here and the other ones, they can grow these $2 billion brands as we go forward. So with that, I think this company has got multiple drugs in their arsenal, and they can do very well. And they also have good pipeline candidates. With that, clearly Pfizer is not a one-trick pony. They got a lot of things going on, and as they progress these drugs and trials, they can have multi-drug portfolio which can weather the storm as we go forward. And I got a quick pipeline here. They got several pipelines, like I talked about, 100 plus. Now we are just touching on one category, which is inflammation and immunology. So in this area, they got 22 pipeline. So as you can see here, they got various things going on here. I will not cover this in detail. This is just one third of their pipeline. They got total 100 plus pipeline candidates they're working through as we speak. So that's one of the reasons I feel good about this company. They are all about R&D and innovation. That's why it's a great story going forward. So if you look at the snapshot of Pfizer, no surprise here. Pfizer discovers, develops, manufactures, and markets biopharmaceutical products. Clear leader when it comes to medicines and vaccine. And this company is safety first. They will make sure patients are safer with their medicine. They take precautions. And now with the COVID-19, they got partnership with BioNTech, and they're really doing great with their COVID-19 brands. So with the stock price is 48.80 and market cap is 273.60 billion. So I think overall company doing great, and company is known for its leadership and really risk averse behavior when it comes to patient safety. And as you look through the stock chart here, it's a 3-year stock chart here. Stock is doing great. I mean, as you can see here, they got their ups and downs. That's why this is a very good long-term play. But look at here, in 2021, stock has really dipped a little bit, but then went up like a rocket ship. Stock is doing great of late. I think they got a lot of things going on here. And from a CEO perspective, Albert Borla, I think he's doing great. He's driving scientific and commercial innovation. And as you look through here, he has built a diverse and successful career. And he was in Pfizer Innovation Health. Looks like he's got a lot of focus on the innovation of the company. That's really indicated by Pfizer's pipeline and the way they're innovating and their R&D spend. So overall, the CEO checks out. Mr. Albert is a great leader, and also we saw the Glassdoor rating for Mr. Albert. I think he's really doing great. I feel good about the chairman. And from a news perspective, it's all about vaccines of late. This company doing great. There is no company specific news as such, but really, they're into the vaccines, and vaccines are doing great. There is no major complaint about Pfizer vaccine. You might hear some news about maybe Moderna maybe heart or some failure type issues. You might see some news around J&J in the past, but Pfizer so far rock solid. There is no negative news around Pfizer so far. So that's the great news for Pfizer. Tells you about their internal controls and their patient safety first approach. So with that, let's look through the competitive landscape. Anytime you look at a company, you got to look at competitors and see what they're doing and how is this company stacked against the competitors. And here I got a lot of these big drug manufacturers, and I also added some of these vaccine plays, because Pfizer is in the vaccine area also. So as you look through here, I got a 1 year performance here. Stock at the top here, Moderna. No surprise here, had done great for 1 year, and then we got BioNTech, it's a Pfizer's partner, and then got Eli Lilly, Novavax, and so on and so forth. Typically, we should always give very close attention to how company is doing from a sales growth perspective. As you look through here, we got many of the vaccine plays doing great from a quarterly and yearly sales growth perspective, and also nice gross margin. And we also need to pay very close attention to net margin. Many of these companies are doing great from a net margin perspective. And then we got here RSI that tells you it's good to buy stock at this time. Off late, Moderna, BioNTech, they a little bit came down from a stock price perspective. That makes them good candidate to buy slowly at these levels. And then we got performance here. As you can see here, I have 1 day all the way to 5 year. That will tell you, company is really not one trick pony, and they have sustained capacity to grow from a performance perspective. And last but not least, we got how much stock is off from 52-week high. So that tells you, is it good to buy now or should I wait a little bit? As an example, Eli Lilly right now, I would probably wait a little bit. It's just 2% off from 52-week high. As you look at this, you can also understand this clearly from RSI. RSI is 70%. That tells you, what, stock is a little bit overbought at this time. Good to wait a little bit for a little pullback to buy more. And as you scan through here, I love, stocks on top here, Moderna, BioNTech, Eli Lilly, great, the sales growth, as well as you can see, a nice gross margin. Then we got Novavax. Novavax is good, but right now looks like their net margin is negative, 80%. They're not making it yet, but I think it's a good one. They got this emergency COVID vaccine going on. I think it's a good one. They also came down in last 2 weeks or so. Then we got Horizon. Horizon is also doing great. Nice 1 year, quarter over quarter, and even nice gross margin and net margin. You could even buy Horizon at these levels, given RSI is 54. Now we got our candidate here, Pfizer. We will jump into Pfizer into a little more detail. As you can see here, price is $48. Great market cap here. It's clearly a large cap stock, $273 billion market cap, and nice sales, $55 million in sales. And even at this clip, they're growing nicely. Quarter over quarter, 92% growth and nice gross margin. They're also making money, profitable company, nice net margin. RSI is 72. With this, what I typically do is really, I would buy the stock on the down days, because 72 is a little bit higher for me. But I know company has got great pipeline, so that's why my strategy for stock like Pfizer, I would wait for a pullback. Whenever they pull back a little bit, then I add. So that way I don't always buy at the top. It's very close to its 52-week high, just 6% off. So strategy like buying on the pullbacks will work very well for Pfizer. I've got great confidence in Pfizer for long term. But this company is, no rocket ship, as you all know. Company has been in the, in this industry for a lot of years, maybe 20 plus years. And we have seen this company. It's one of those steady Eddie type companies, not a rocket ship that can go up like a Moderna as an example. Then we look at a few more companies here: AbbVie, Johnson Johnson, Biogen. I love all this here. As you see here, AbbVie and J&J, great sales growth here. I love this, and they also got great net margin too. So that tells you, they keep the money, they have profit at the end of the day. And as you look through here from a RSI or a relative strength index perspective, AbbVie is in a buy range right now with the 54 RSI, and it's also doing nicely as you can see here. But I would wait buy on down days given it's just 2% off from 52-week high. And I also like Johnson Johnson, rock solid company. And we got Biogen. Biogen is a very interesting play. I've been buying Biogen stocks on the bad news. This stock has a tendency to really sell off very badly on any bad news around Alzheimer disease. Sometimes they make great news around Alzheimer stocks source, and sometimes news is not good, stock drops. So that's why with the Biogen, you should always wait for a news break. Whenever there's a bad news, just go ahead and buy. This company has a history of performing and bouncing very nicely after a very bad news. And then we got here Novartis, BMY, and whatnot. I think many times stocks like BMI, I like it because it's a very steady Eddie play. They do very well. And then we got Gilead. Gilead has done nothing for a long time, so I would be a little careful because this could be, sometimes viewed as a value trap. I think we should buy Gilead on a really bad day. As an example, right now Gilead RSI is around 64. I would wait for it to cool off a little bit. This used to be a darling in the Wall Street a while ago, but now it's not doing that well. That's why it's good to buy on down days, especially stock like Gilead. Then you got AstraZeneca, GSK, doing so, not that great, but okay from a dividend perspective. Same story is Sanofi. It's in the same place for a long time. And I love Merck. Merck gives a lot of good buying opportunities. Merck off late it's going up and down nicely. On a down day, you can buy Merck and they will do well. They got their mojo back off late. And then you got Amgen here. Amgen used to be Wall Street darling. These days, as you can see, it's not doing great. That's why Amgen also is good to buy when they're down a lot and hold it for a while. And then you got here OGN and GRFS, and OGN has got I think good gross margin here, and same story GRFS, but they've not done great from a 1 year perspective. So I would probably wait and buy. For example, GRFS here may be okay to buy a little bit, because RSI is very low. Only downside is even sales growth is negative right now, so you could buy a little bit and hold it for a while. So with that, this talks about the competitive landscape. I know many of you want to buy, some of these great drug manufacturers for a dividend. So as you look through here, look at dividend yields here. Pfizer, if you have a retirement account as an example, very safe play. You could buy a lot of Pfizer here, have a good allocation size, buy and add in the dips, so that way you will get a nice predictable dividend yield 3%, which is great. And also for your retirement account, AbbVie is a great stock. It gives you nice sales growth is even better than Pfizer when it comes to AbbVie. I would also buy and hold AbbVie in your retirement portfolio. And then we got J&J, rock solid stock. You could do same thing, buy and hold J&J. And as you scan through Gilead, right now it's a nice dividend yield, but sales growth on this company is a little bit shaky at times. It's also, I think it's actually not Gilead, BMY. So BMY, we got a nice dividend yield. It's a good one even in your retirement portfolio. Then as you scan through here, Sanofi, you could buy and hold. I think with the US investors, it's okay to buy in a retirement account, but sometimes you'll end up paying some foreign taxes on stock like Sanofi. So with that, I think all great companies, and even I like Merck. If you look at Merck here, they're paying a 3% dividend, rock solid company. So with that, let's jump in here and look at Pfizer in a little more detail. So if you look at Pfizer from a fundamental perspective, looks like there is a buy rating here by this company, by this analyst here. Price target 43. Right now, stock is well past 43. They're at 48. So overall, stock is doing great. And from an earnings per share perspective, as you can see here, stock is kind of going up and down, but overall, they have a positive earnings per share. And from a sales perspective, company doing great. Nice clip here. With COVID-19, as we go into 2021, it should even improve better. And shares outstanding, the count is going down slowly, which is a great story. And as you see, look at here from a fundamental perspective, stock price is $48. Nice market cap, large cap, $273 billion market cap. And as you scan through here, nice sales number here. They got sales growth. I like the sales growth here. Net margin, company is profitable, as you can see here. RSI is a little higher. That's why I would buy it on down days. And doing nice, even if you hold it for 5 years, you got 79% growth here. That's why this is one of the rock solid companies. You can buy this company and sleep peacefully at night. And as you look through here, even if you are a trader, you could buy this stock because look at the volume here. It's a very liquid stock. 57 million shares transacted in one day, and on a 3-year average basis, 27 million. So people are buying and selling the stock. It's very liquid. You can get in, get out very quickly. And they got a lot of cash, and also they got a lot of debt, as you can see here. That's why debt to equity ratio is 0.5. I'm still comfortable with the debt here because they know how to manage the debt. It's not too much. Next year's growth estimate is a negative 12% right now, mainly because they had a very good boost with the COVID-19. So that's why estimate is low. I'm sure they can beat this growth estimate nicely. They got a lot of free cash flow. They're spending money on R&D to become the cutting edge player in the vaccines and a lot of their pipeline candidates. And this company is clearly bullish. They're above their 20-day moving average by 6%. They're above their 50-day moving average by 16%. And they're also above their 120-day moving average. So I think overall, stock is bullish. Company doing great. Wall Street is really appreciating the company by taking the price higher. And they're doing well from a 5-year, 10-year, even 10-year. If you had held Pfizer for 10 years, you would have got 327%. That's why this is no one-trick pony. This company can deliver over the long haul, and that's proven by 10-year return here. So with that, let's jump into a little more details. Now let's look at fundamentals. One thing I always love to look at the companies, anytime you should not look at the company on a one-time performance basis. Don't look how company are doing right now at this instant. Instead, look at the company from a longer horizon perspective. That's why I love looking at a fundamental chart going through several quarters so that way we know how is the company trending. So if you look through that lens here, right now Pfizer stock is at $48.80. Market cap is $273.6 billion. I've got here all the way from current quarter, which we had the results a couple of weeks ago, to 329 2019. So this is a lot of quarters for you to get a trend idea. So as you see here, from a market cap perspective, market cap was 260 billion back in March 2019. Now it's 273 billion. That's why this stock is a steady eddy type stock. It's got ebbs and flow. It's not a always straight up, in a straight line. So as you see here, market cap was 260 billion. It became 230 billion, 215, even came down to 192 billion during the COVID-19 down days, but it got its mojo back with the BioNTech partnership and COVID vaccines. From 191% in 6/30/2020 came all the way to 273%. So that's an astronomical improvement here from a market cap perspective. And stock price perspective also, as you see here, it was $40 during the COVID-19. It came down to 30. Now it's 48. So it's doing very well. Especially the COVID-19 vaccine have boosted Pfizer's bottom line and also top line. From a sales change perspective, I think they're doing well. Even from a sales perspective, I think sales number has been doing nicely, even though it was a little bit lower on 6/30/2020. It's very nice right now, almost doubled from those levels. Quarter over quarter sales change is great. I think this company has got a positive sales growth. I always love companies with a positive sales growth. And from a revenue surprise perspective, this company is surprising Wall Street with the revenue surprises. Wall Street loves positive surprises. Only back in 9/30, I think they had a negative surprise, and same is the story back in 2019 December and 2019 June. So overall, this company surprises Wall Street with a positive revenue surprise. And as you look through the earnings per share here, I think they're doing very well from an earnings per share perspective. And there is also positive earnings per share, as you see here. Typically, once the company strings a couple of good quarters, as you can see here, 3 good quarters from a revenue surprise perspective, 2 good quarters from a earnings per share perspective, and companies also little bullish when it comes to guidance, that tells you this string of positive surprises can carry forward, and that will result in a better stock price as you go forward. From a cash perspective, they got a lot of cash. As you see here, their cash pile increased from a $13 billion in March to $21 billion in June. So that's a very good improvement. It's almost doubling the cash pile in just 1 quarter. And they do have debt, as you can see here. They're managing their debt very well. It was huge back in 2020. Now it's manageable. That tells you they know how to manage their risk and their debt levels. Their cash flow, free cash flow, is improving, as you can see here. That's always good. Operating cash flow is also increasing nicely, more than doubled, and gross margin is great. I mean, it's dropped a little bit. I think as we give away some of these vaccines to other nations, poorer countries, that may be a little bit pressure on the gross margin, which is expected, but overall company doing great. And they also have a positive net margin. They are spending money on R&D. As you can see here, this company has increased its R&D spend between 331 2021 from March to June. That's a good story. This company really wants to be cutting edge. And then we got here return on assets, return on equity. I love to see both in double digits, but this company is doing well in a good position right now. And from a price to earning perspective, it's still very cheap. It's not expensive from a valuation perspective. And same story, the price to sales. Even up here with stock price at all-time high, still from a valuation perspective, this company is still, you can buy the stock still. And nice dividend yield, 4%. And as you can see, they've been paying good dividend all along. So that's good. And they got payout ratio is 39%. That tells you even after paying the 4% dividend, they still have money. Their payout ratio is just 39%. That's also great. It used to be a little bad a while ago, as you see here, 9/30 back in September 2020. They used to pay out most of their money through dividends, so they did not have any money left. But now the situation has improved nicely. Now they got money left after paying the dividends to shareholders. So, in a nutshell, I like this rock solid fundamentals with Pfizer. This company knows how to manage its cash position, how to manage its debt, how to spend in R&D and be competitive. So overall, very steady Eddie company. No negatives, all positives going forward. Now let's look at the performance of this company over the years and see what we can make of, through this performance. So as you see here, this company has been around the block for a long time. So I got here performance all the way through 1998 till now. So as you can clearly make out here, this company is not a rocket ship or a one-trick pony. This company can do very well over the long haul. So as you see here, 1919, they had a 67% appreciation, and it's a rocky road as you can see here. Came down 22% down in 1999, and there are down years for this company, and then there are rock solid up years for this company. Overall, as you see here, in a given year, stock has never performance was never greater than 40. I think 32 is one of the higher one here, and back in 1998 it was 67%. So that's why this is one of those places you get the capital appreciation, you also get nice dividend. So don't expect this stock to double in a day or two like other small cap names you know about. But this one is a steady eddy for you, and you can buy this stock and be comfortable, hold it for a long time. No need to worry too much about the capital risk when it comes to this company. And off late, in 2021, they got their mojo back. Now they got a lot of solid pipeline, and vaccine candidates are also doing very well with COVID-19. So that's why I feel good about this company. As you see here, Pfizer is reinventing itself. From 2011 onwards, company showing some positive strength here. As you can see here, before 2019, I think it was up and down. But after 2011, after 2011, company is really doing nicely, a little more predictable here. So now we got monthly performance of Pfizer. As you see here, this company has got a lot of reds and greens as you see here. But off late, since April, stock has done great. They got solid monthly gains all along. This is one of the reason I tell you to wait for a little pullback to keep adding to the position. Right now it's great. I have full faith in this company. They can deliver very good results. But if you want to add more to your position, wait for a little pullback. As you can see here, company does give you opportunity to buy with this red here, 6% drop, 3% drop and whatnot, even 14% drop back in June. So it's a great company, but always this gives you opportunity to buy when the stock is down. Now we got weekly performance here, rock solid performance. I love this performance here. They got more up days than down days as you can see here. And from a daily performance here, as you can see here, we had 2 down days here. This is when you can buy a little bit and hold. And if there's a more down day, you could add more. So slowly buying chunks on down days. Clearly don't buy on the up days. I think that will be a good strategy for this stock, as evidenced by down days. You can see 2 down days here, 1 down day here, 2 more here. So it gives you opportunity to buy on these down days. Now let's look at the monthly performance pattern. I love looking at monthly performance pattern. Even though it may not rhyme completely, but you can make out when there could be weakness and what could be the good month to buy a stock like Pfizer as an example. So what I have here is I got the stock performance all the way from 2021 August to 2010. So that tells how to see and glean some of the patterns when it comes to Pfizer. So as you see here, from March all the way to August, stock is doing great. It's the rocket ship as you can see here. But typically as you look through this company, they have a little bit, in January and February. Typically, you can expect some bumpiness here. This is a good time to buy this stock, as you can see here. And as you see here, there could be some bumpiness somewhere here, March and April. And as you see here, June, it had a big drop in 2020, especially with the COVID-19. And then we got some drops here in the October, September timeframe and December timeframe. So as we look through here, October, September, August, this quarter, these 3 months here, typically looks like they got some pattern here. Stocks might go down. So that's why I would say, even though stock went up nicely last, since March all the way to August, expect some bumpiness as you go into September, October, November. That's when you can buy some and hold for a while. And also, I would say even buy on some of the down days. The reason I'm saying don't buy too much right now is in August so far, just halfway through, stock is already up a solid 14%. That's why buy on the down days and accumulate. It's a great stock. So this will give you a quick snapshot of the company, and that tells you when to buy the stock. And I love to look at this, and just make decisions based on the historical pattern, even though it may not completely rhyme. But you can get very very good indication from when the stock might face some bumpiness, and that's always a good to have in your back pocket. So with that, now let's jump into performance. Let's look at Pfizer's 5-year weekly chart. So as we see here, stock is a rocket ship. It was down, went up nicely. This is 2017, as you can see here. Then we got 2019. Stock kind of came down in 2019 for most part. 2020, COVID-19. With that, initially stock came down to rock bottom, as you can see here. Afterwards, with the BioNTech partnership and COVID-19 vaccine, company has done nicely, as you can see here. From say 2021 January, stock has soared so high. This is one of the reasons. The moment I see a clip like this, typically it tells you, hey, you know what, buy the stock on the down days. It's a great story here with the COVID vaccine, but great to buy, accumulate on the down days versus buying when the stock is up. So overall, I like it. Clearly bullish play. I like see here we got 20-year, 20 period, 200 period moving average here, 100 period moving average, 50 period moving average, 25 and even 9. So if you see here clearly from a moving average perspective, stock is very, very, very bullish. All these moving averages are in the right place with long-term moving average down and the short-term moving average up. So solid bullish play here. So that's why right now stock is bullish. Wait for a little pullback. Add to your position in all the pullbacks. Now we got here 1-year chart. Now we understood how the stock is doing in the long term in a 5-year chart. Now let's look at 1-year chart to see what we can make out here. So as you look through here, there is the earnings back here in November time frame in 2020. Stock went up, as you can see here. Then it came down. One more earnings, stock went up. One more earnings, stock went up. One more earnings somewhere here, and I think stock went up nicely. Right now it's a nice bullish pattern here. Stock tries to bounce off of its 25-day moving average. As you can see here, we got I think we got a couple of moving averages here. I think it's trying to bounce off of its 50-day moving average. This is the 50-day moving average. I think we will see. I think this could be its bouncing pad here, or a support line. So probably now with the little drop here, stock should take off again and bounce off of its 50-day moving average. One thing I always pay attention to is really RSI, or relative strength index. So as we see here right now, stock is very solid from a relative strength index. This is one of the reasons I personally advise you to wait a little bit for a pullback, RSI 67. Typically, when the stock hits those levels, normally you can expect a small drop off, evidenced back in December. And if you see here, RSI hit almost that level, but stock still did well. But now with this quick acceleration, we are still in the area of high RSI overbought positions. That's why I would buy on down days, because the moment RSI hits the top here, you can expect a little bit bumpiness. That's why buy on the down days. And implied wall perspective, implied wall is 47, which is a high for a stock like Pfizer. So if you're a premium seller, like a put option seller as an example, you could sell some put options below the current stock price. If the stock comes to that price, you can buy if you want to buy stock anyways. That's a good play with the stock like Pfizer. You can buy the stock outright, or you can sell some put options, so that way you can buy when the stock drops to the strike price. And from a DMI perspective, clearly very bullish. Look at the spread or the gap between the red line here and the blue line. As you see more and more distance between the red line and the blue line, it tells you stock is in a clear bullish territory. And also look at the ADX line. The white line here, it's the ADX that tells you the strength. ADX line is going up, and blue line is above red line. That tells you clearly in a positive territory. Stock is showing no signs of falling down at this time. Clear positive territory. And if you look at the volume average on the balance volume is going up nicely. That tells you people are buying Pfizer stock. It's always good to know that. And then you got check-in money flow. Smart money has been flowing into the stock. There is a small bump here, as you can see here. Same story with the on the balance volume. That tells you smart money already bought a lot of the shares, and now they may be taking some profit off the tables, as you can see here. That's why I would buy this stock on down days. I'm sure it will go back up again, but I would buy on the down days. And you could also look at ATR. ATR tells you average true range. That tells you in a given day how much stock can go up or down. Right now it's 1.2. That tells you on a daily basis there is a good range of $1.2. This is why some of the day traders they caught attention to Pfizer stock, because there is a $1.2 range in a given day. Many day traders are trading the stock like Pfizer, which historically nobody paid attention to, and they are making some money out of this Pfizer and its appreciation with the $1.2 daily range. Now let's look at Pfizer and see what options market is telling us. So if you look through here, we got Pfizer option chain here. Currently stock price is $48.80, and yesterday it came down by 51 cents, as you can see here. And as you scan through here, um, right now stock price is around $48, $49. If you see here, we got lot of call options sold at 49 and at 50, even more at 50, in 57 even more, 55 even more. That tells you in the options market people are betting Pfizer stock will go higher. I think highest volume right now is at 55. Clearly, many people believe Pfizer stock will go to 55 by December 2021. I think that's a good indication to understand, and I think typically that tells you the sentiment behind the stock like Pfizer. Then as you scan through here, put side of the house, there is a not so good volume when it comes to put options. It's just 221 open position here, or open interest, whereas on the call side is 3,900. So that tells you people are more bullish about this company than bearish. I mean, people do have some put options here, which may be for just to make sure and hedge, but typically a number of call options traded is much more than put options, so that's why it's bullish, and I think it's a good one to know. And one more thing to notice, the implied wall, as you can see here, is 32.12. So we can expect a $7.02 move from now till December. That's the expected move. So that's why it's on a, it's plus or minus $7. It's good to know the expected move so that way you can make plans around it. As an example, if you're a put option seller, you could probably buy the sell the put option below, maybe around 7% below the current price, and be a little bit safer, since the expected move is around $7.2 from now till December. But if you're a put option seller, clearly don't sell put options so much out. You could sell the put options maybe 30 days out. Now let's look at option statistics here. From an option statistics perspective, as you see here, the call options traded 569 thousand contracts, put options traded 226. That makes a put call ratio as 0.38. Clearly very bullish, because more call options are traded than put options. So with that, clearly options market tells us, hey, coast is clear. You can buy Pfizer on any down day, expect the stock to go up because there are a lot of open calls at a higher strike price level, especially 55. Now, let's look at the quarterly result very quickly. I will not drain the slide, just to go through few key messages here. Pfizer, we have CEO here, Albert Bourla, and looks like they did great. They beat earnings per share by 9 cents, and they beat the revenue by 249 million. They had a 60.81% revenue growth year over year. That's the great growth here. Solid earnings. I like it. And the important thing here is really extremely strong financial results through this COVID-19 vaccine with their partnership with the BioNTech. And they also delivered great operational revenue growth, and also they did very well from a growth perspective overall. And their vaccines, I think this is the great indication. Their vaccine itself, the Pfizer BioNTech vaccine, that did very, very well. They have shipped more than 1 billion doses since last December. And the vaccine also contributed to $7.8 billion in global revenues. And they continue to sign agreements with the governments around the world. So that's why, it's going to improve as you go forward. They're signing up more and more contracts, and they're delivering more and more COVID-19 vaccines. And even FDA, they're approving their pipeline candidates, in this case for invasive diseases. I think this will tell you their pipeline candidates are getting approved. That can be catalyst as we go forward. Their CAGR, the revenue compounded annual growth, grew 6%. That's very good. And even through 2025, they will expect double-digit growth on the bottom line. That's always good. And they have a lot of these programs there, with the key pipeline candidates, and they're seeing there'll be lot more approvals coming before 2030. So that's why overall pipeline and the way they move pipeline is very good. And they also expect to manufacture up to 3 billion doses of this 3 billion doses. That's always good. They're improving their capacity to have more and more doses. And in summary, looks like they had a strong quarter, and they also increased their guidance. That's always good. Their solid pipeline and promising business development. And they also have an agreement with the um, Orvinas, which is again a biotech company. I think overall this company doing well from an organic growth perspective with their pipeline. They know how to partner with folks like BioNTech, even Orvinas. So I think overall solid story. I would really recommend this stock. Buy on down days and accumulate, hold for a while. Now, from an insider trading perspective, as you can see here, Nothing glaringly wrong here at all. These are all, as you can see, some small sales here, $80 billion here, 100 million, 80 million, $80,000, $107,000, 1.2 million. Nothing glaring here. I think this is a very very much in line with the expectations. Insiders really sold around 0.3%, which is very minuscule. Institutions own a lot. Institutions are buying Pfizer share. So overall it's a nice story. Nothing wrong around insider trading here, nothing glaring here. So with that, let's see what should we do now. We have Pfizer here sitting almost at all-time high. What should I do? From a high-level perspective, their COVID-19 vaccine is really a crown jewel here. As you can see, a $7.8 billion revenues, and they continue to sign agreements. So it looks like this COVID-19 vaccine growth can go on for a while right now. Revenue increased 86%. Operationally, that's always great. They expect to manufacture 3 billion doses. That's always good. They anticipate significant amount of remaining 2021 vaccine manufacturing capacity that will be delivered to low volume countries, low income countries. So this is one of the areas, if they deliver to low income countries, which is very good, because we need these vaccines given to these low income countries. But you can expect some pressure in the margins, because they are giving that at a not for a profit price. So even though it's a good from a morale perspective, expect a little bit pressure to the gross margin, which is okay. This company can weather it in other areas. Lot of pipeline candidates, as you can see here. We got some of these two drugs revenues were up nicely. They got solid pipeline, 100 plus candidates in the pipeline, and they have increased revenues and earnings per share guidance for the remainder of the year. It's always good to see a company having confidence in themselves, and they have pipeline advances, and also agreement with the Urvinas. Overall, I think it's a very, very solid play. I would buy the dips and accumulate. I think this company is one of those steady Eddie companies, not a one-trick pony. I feel confident. confident. I'm buying this stock on down days and accumulating and holding it for a while. So with that, thank you very much. Happy investing and trading. Please subscribe.